In this video, traders, we are going to look at why are we hardwired to be poor traders. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Okay, so human beings are inherently hardwired to become poor traders. We've heard this before, I've talked about this before, but why is that the case? Well, I was reading an article and I wish I could remember where the article was because I'd referenced this study. There was a study. And basically they went out into the street and they said, hey, you have bought a stock at $50, okay? And it's currently trading at $60. You've also bought a stock at $50 and it's currently trading at $40. What are you going to do with these two stocks? And almost without fail, something like high 90% said that they would close the position that was in profit. In other words, the stock they bought at 50 was up at 60, they would close that and they would keep the one that was in loss. And when further pressed, it said, well, I hope that it will come back. And this is inherently bad decision-making process for traders. As we know, we should be pressing when we're right. If a stock is up to 60, okay, assuming all other things are equal and assuming all our analysis and stuff put us one side for now, but we should be looking to hold that for 70, for 80, for 90, for 100. A stock that's down $10, that's one we should be cutting because it's not performing as we expect. Now, I appreciate there's some grey areas in there, but on the whole, fundamentally, that's what we should be doing. We should be pressing the winners and cutting the losers. So when we ask individuals, and actually, I'm gonna do this as well. When I go out and kind of meet friends and what have you and family, I'm gonna say, hey, I've got a bit of a question for you. What would you do? I'm gonna see myself, and I'm pretty sure the results are gonna be identical. Or maybe the odd one or two kind of speaks to me about trading will be clever and go, no, you run your winners. But hey, I think the majority will do that. So let me know if you do that. Let me know your findings in the comments section. But so the point is that this is inherent behavior that is not conducive to profitable trading. And so we try as humans to, we all try as traders, should I say, to kind of rewire ourselves a little bit to think differently. And that's why it takes such a long time often, because impulsively when we start trading, we want to snatch those profits. You're up a couple of $100, you want to snatch it. You're down, you want to leave it, it's going to come back, it's going to come back. And so, we have to unwire and rewire ourselves. And some of the things I've got here, guys, are, number one is fear of loss. Now, it's funny because even though we fear loss, we are still ingrained in us to hold a position that's in loss. But really the fear of loss is number two. It's fear of losing what we have. When you further press people and say, why do you take this stock? Why do you take that $10 profit on that stock? Well, I didn't want to see that come back. I wanted to take that and there's without going too deep into it, there's a few things, isn't there? One's the dopamine hit you get from grabbing any kind of win, a small win. Marketing people do it all the time. Supermarkets do it all the time. This small kind of win gives you a dopamine hit and makes you want to spend more, makes you want to risk more, makes you want to do more. So, grabbing that small win, that $10 win, makes you feel good. And you don't want to see that losing. People are more happy, if you like, with going from $50 to $40 than going from 50 to 60 to 50. They're happier losing $10 straight off the bat than they are making 10 and losing 10, because the emotions are swinging to joy, to sadness. The actual excursion, if you like, or the amplitude, I suppose, if you're looking at a sine wave, would be, double than normal. So that really kind of stings people. So what else we got? Number three is fear of looking silly. Because generally human beings are wired very, very similarly. They don't want to look silly. Well, you could have taken the $10 profit. Well, you had $10 profit there. Why didn't you take it? Well, of course, hindsight, but people don't want to look stupid. So in that experiment, they're like, well, $10 there. Why didn't you take $10? They don't want to look silly, and perhaps even taking the loss makes them look silly because, again, we're conditioned to kind of really being ingrained into the loss is bad and win is good. And of course, maybe it is in most aspects of life, but in trading, it's not necessarily the case because it's a long-term benefits of those, the long-term thesis we've got. So 4, fear of regret. Many humans, as humans, we kind of fear that we're going to regret not taking those profits. It was there at 60, I should have taken it. Now, yes, okay, in trading world, perhaps when it's going to 100, we regret not holding it. But I think really we are hardwired to regret not taking a profit more and seeing it come back down than we are to regret not holding a position. I know as traders, as we kind of get more experience, that comes into play a little bit more, but I think generally as humans, that's how we're wired. We're wired to say, hey, you had that on the table, you didn't take it, that could have been, you know, $10 in your pocket. Number 5, impulsive, often wrong decisions. What I mean by this is our initial impulsive decision is often wrong, but because we have confirmation bias, or because we have, you know, the bias that really anchors the decision. Once we've made the decision, it's sitting there, and then we end up looking for other things to confirm our decision. And plus, the initial decision we've made is sometimes very hard to make a different decision. So the impulse is to say, take it. And of course, then it becomes emotionally challenging to sit back logically and go, well, that's up 10 for a reason. That one's down 10 for a reason. You know, maybe I should be looking at this differently. Even that in itself is hard. So again, you've got a double whammy of how we're hardwired. And number 6, guys, is corrective actions do not equal profits immediately. So correct actions do not equal profits immediately. What I mean by that, so correct actions are, if you have done all your analysis, you've waited for your setup, you've pulled the trigger, you've executed correctly, it doesn't always mean that you're going to get profits. You don't get that reward for doing the right thing. You know, unlike most other fields, you know, if you are doing something correctly, you are going to be rewarded for it. Crazy analogy, let's think about bowling. If you bowl correctly and you've got, you know, the skill right and you have it right done, and some professional bowler probably out there is going to tell me I'm wrong, but as someone who very rarely bowls, but just trying to think of an analogy, if you're doing everything right, or if you're hitting a golf swing or whatever, if you do it right, you are going to get the reward instantly. You know, if you do something correctly, you're going to get the reward instantly. If you have a mentally solve a puzzle, you're going to get reward of solving the puzzle. You know, if you're whatever you're doing, if you're doing it, you will get the instant feedback. Whereas in trading, that won't happen. You know, you could do the right thing, and still lose. But over time, that's when you're looking to make the gains. Over time is when you're looking for it to play out. So, you know, we don't often get this feedback. So this is why it's quite challenging. So we end up changing what we're doing. Like, well, why should I run profits? Every time I try and run them, the thing comes back from me. Well, you know, maybe in the wrong positions, maybe in the wrong type of markets, maybe in that market, it's right to be taking little profits, short profits. And so because it's always changing, never dynamic, again, it's challenging for a trader. So those are 6 things, guys. Again, spurred on by this paper that I read about this, kind of interview people in the street and whatever. But anyway, let me know how you get on. Ask your friends and family and just see and prove it to yourself and see, hey, what do people do? Do they take the profit? Do they take the loss? How do they do it? And then when they say, hey, I'm going to take the profit, just ask them why. You know, why they feel like that, and they'll tell you. No one's bothered. So I might do the same as well, and we'll see what our results are. All right, guys, take care. See you next one. Bye bye.